Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Welcome everyone to Saturday weekly forecast strategy, whatever. Occasionally it's just me on a diatribe. The screen you guys should be seeing here is the Market Watch screen. Let's just make sure we can hear me okay and see the screen okay. So just drop some comments in our public chat as we continue to iron out all this. Hopefully everything's working good. All right, so let's make the screen larger here. Okay, so hopefully, obviously you guys are in the room. You're, would imagine somewhat interacting to a certain degree on AP Live and the whole social platform. Do note that if you just go into the groups here, which you may have already done, this may seem I have put in a bunch of new pieces. So, and I think you can just see them all. I think the thing that's always really strange is if you go in through AP Live and go into the Market Watch, at the bottom, these are the midweek and the strategy forecasts. So you could get to see all that stuff. You guys may have already gone through this, and this is the midweek. So for some reason, the recording and it probably was just some of the problems they would have ironing out these presentations, it's not showing up. But last Saturday's was. So there you go there. But if you go into just the groups here, I've posted a bunch of stuff, but where are the other pictures I posted? I guess I could just post them again. I was having the ability to post, and then I wasn't able to just go in and share, but you guys kind of get the story. If you want to do like a friends thing, that's cool. I don't know what that's going to do as far as getting alerts. Maybe you just get pop-ups on stuff we post faster. What I would probably do, because this whole news feed's going to get really full, which is good. Just do a search for risk management is my tag, and you'll be able to see everything that I've posted, just going in and just clicking on the different tabs. I typically put risk management on everything I post. So there you go. Oh, here they are. So if you guys haven't seen this piece right here, this is actually a great piece. So everything that I talked about at the summer event in Orlando, the Ride the Wave event, was all based around just not taking lots of hits, having a more than a 4-to-1 or a 3-to-1 risk to reward ratio, and the fact that that truly is the holy grail of trading. So this piece, if you haven't seen this before, as I was told a long time ago when I was first getting into this business, print this piece off, have every single one of these tables memorized, so that I could stand on my head after a case of beer or a bunch of shots and still be able to recite this stuff. This was given to me a long time ago by a really smart 7-figure trader at Goldman, who, as you guys may have heard some of my story, I was very fortunate to sort of be allowed to mentor under his wing. So there's a good piece on that. Let's go into one other question I actually got last week. Let me just copy this for you guys and post it. Feel free to share these if you want. Can you paste in this room? Let's try this. Let's just try and paste. There you go. So there's the YouTube channel. Let's do also the Twitter channel. So you guys, so these are the only two professionally that I post. I don't really come out with a lot of posts, honestly. But I'll tell you, with the approximately 150 of these people that I follow, some of these guys are some of the best. You guys have probably heard me talk about this a lot before, but there's a couple of billionaires in there, so forth, that are just big traders, hedge fund guys, so forth. So I always try and post, really good stuff. Like, you'll see a lot of Steve Burns stuff. You'll certainly see a lot of Merck in here as well. This guy's down in Florida, where I'm actually going to be moving to. I hope to meet him live someday, because this guy is one of the best. Mostly equity space guy, but lots of risk management stuff that he's done, and so forth. So you could go in and follow along. And I try not to put all this chitty chat crap on Twitter, or videos that don't make any real sense. One thing I will caution you guys about with these videos is many of them are on the futures markets, and I'm not dissuading you from viewing them, but I just want you to understand that focus, in my opinion, more on mitigations of risk, all the different subjects I have on um, the markets in general. So most of these presentations I've just tried to focus on. You've seen a lot of these future trading videos. This is stuff I used to do a long time ago with students that I'm not really that active in right now. All right, so we got those posts done. Let's get into the calendar. Make sure you're always choosing the next week. So as we look to calendar, let's see where we are. So we're starting off. Notice this says August. Isn't that interesting? Go forward. So we're starting the 19th. You always want to make sure you choose the right. Now I'll go in and just filter out stuff, keeping mostly red folder events. So we've got, as you guys may know, tomorrow is a bank holiday. I don't know how this is going to affect current. I can't imagine this is really going to be an issue other than just lower volumes, right? Because none of the Asian banks, at least with the two biggest countries, are going to be doing any trading. So I would assume that the volumes are going to be lower. There's an election in Canada, God help us. Bank holiday on Monday as well. So both of these events, I don't know what they're related to. I guess it's Mid-Autumn Festival. Okay. I don't follow these holidays too closely. Tuesday, nothing going on. So obviously the big one this week, in my opinion, at least U.S.-based, dollar-based, is going to be this FOMC press conference statements. Do keep in mind these times aren't always optimized for your time zone, so it's going to be different as far as your particular zone. But really, certainly some GBP stuff. So, with the exception of the election, which certainly could be an issue, because these Canadian currencies have been I'll tell you, this certainly could be an event, you guys. I don't pay much attention to what's going on up there. It could affect currency. I'm actually going to put something out on the channel about that, because that's just such a. It could be a bunch of nothing. But when I don't really have a clue as to how it's going to affect, like if everybody's expecting a pro-growth Politburo, or whatever you're calling these guys, parliament essentially in Canada, they, it's like, let's say a different type of like Labor Party got voted on, or they at least won the majority of the election. That goes completely against what the previous party's policy was, right? So, and it could have dramatic effects for imports and exports, essentially a GDP of Canada, right? So that poses a risk just in and of itself, because it could affect the Canadian dollar. How, why, to any degree, I could be completely wrong, obviously, in this assumption. But it's probably a good thing that a lot of the developers have this pair turned off in many cases. I hope they are still continuing to echo that sentiment on their presentations last week, which I have not seen. All right, so enough for that. Let's also go into charts. I'm going to skip through the equity indices. Let's just focus on the dollar. because we had a break from very tight area of resistance and a lift. Now, essentially, we could be taking another crack at this area that has been absolutely resistant for almost a year. And that's this dotted line right here at this 93.50-ish area I've been talking about for a long time now. Beginning to sound like the biggest broken record on this, but this is the resistance point that is reversed at every time. The smart money, if you will, and the forecasters they're all changing up their forecasts. I have no feel for where the smart money thinks this is headed, right? Because I don't put enough time in to consider myself the smart money, so I try to pay attention to some of the big names out there and what the whole idea is. I mean, David Hunter still thinks this thing's going to 85, which I've been talking about a lot. It's obviously a much longer term move. David is a far smarter individual than the vast majority of people out there in this area, so I pay attention to him. I follow him on Twitter, by the way, as I do. He is an exceptionally engaging individual, but he must just be bored because this guy's got more money than God. And he spends a lot of time refuting and rebuking his stories to people that don't agree with him on Twitter, which just continues to be cool. Why? Because it just gives you more insight, right? It'll be like if all the complaints that Bezos took in the early days. Amazon's not going to work. You can't just ship stuff to people, and then once I put their credit card, it was just like a con. Every time Bezos would get all worked up over it, you'd learn more about Amazon's strategy. So it had sort of this self-fulfilling prophecy to it, which is the case, at least with David. It's pretty cool. What else I want to say about the dollar that I haven't already said 100 times? For those of you just joining us, because I know we have a lot of new people coming on the platform, sort of the edge of the cliff right here is down in this 88, or I should say 89, pretty much all the way from the 88 to 89, 30-ish area. This is the edge of the cliff for the dollar. We have to go to a weekly chart. I always try to do next. You can see how that 88 area was. This was a while ago. Obviously, this is almost 2.5 years ago. But this was the final area before what more than likely would be just a zipper move to the high 80s, probably the first start. So you can see how we just spent a lot of time balancing, and this is a great example. Now, obviously, there was some big events that led to this. A lot of events, a couple of huge failures in Europe and some other craziness going on. But it really put us up into this upper zone, which we've been in for 6 years, right? So it leads us to believe if this wouldn't hold here and this mid 88 area, that we would probably just drop $3 fast, right? This is an example of something that there's no way that and I don't care if I miss all of the trades, by the way, there's no way that I would want any algo taking any long trades of the dollar if we broke below this area. Steve, you could be wrong and you're stepping in front of the software and it's fine. It's actually one of the few, probably real rare times that I would. So, or you could just turn it off, right? And let things settle out. Because more than likely, we're just going to zipper down in movement. Probably one time framing down, as you see. We were one time framing up with a good chunk of these candles here throughout the early parts of 2015. Long time ago, but I think it's important when it comes to currencies. One also has to say, the institutions that took us up, whatever that group of what's called other time frame players are, you don't know if they're going to defend this area again. It's 5 years later, right? I mean, who knows? Their numbers could all have changed, right? But the fact is when you're looking at technical analysis and you see these types of moves, which is an absolute outlier from the previous pattern, as you can see, we balanced for a while, right? And then just boom. Now we've spent a good chunk of 6 years in this upper range. It could break. I think it's pretty solid for now. But I mean, all bets are off next year once the Fed and a lot of other central banks stop their, what I like to call, cash coming down upon thy globe, at least as far as developed markets. Let's take a look at the euro. Same thing. Not going to spend too much time on this. I want you guys just to see this from a weekly chart. You know, we broke almost the exact opposite, obviously, of the moves that you saw in the dollar. We dropped back down to the daily, which puts it a little more in perspective, at least just since the beginning of the year. The support right here at the one spot 17, almost perfectly. See that? For the question that I got on Telegram, do me a favor and put questions in the, just put it in the AP room, the user, because then everybody can see the questions. But I choose to look at dailies and weeklies. I don't get too into the monthly chart because I'm just trying to stay big picture with a lot of this stuff. If I'm trading it, which is, you know, in a smaller time frame, I'll look at the 4-hour chart, or, you know, obviously hourlies. I mean, hell, you can see I drop all the way down to 5 minutes, depending on what I'm trading. 5-minute charts are typically the chart that I look at, or a Renko, when I'm trading the futures markets. All right, so GBP, not much has changed since Saturday. And next, this is this is why this is, obviously, because the dollar rallied 2 days. You know, the arguments between low volumes in the summer and all that stuff's all gone. So I think there's just, over the course of the next couple of months, essentially until more like a month and a half to the end of October, there's going to be a lot of portfolio managers and trading desks. I think there's going to be some big changes and shifting around of portfolios. So I think that it certainly bodes for more volatility down the road, which I absolutely expect. So for the other question that I got last week, I'm not sure if I addressed that. You can use an index called the VIX, which is right here. So this is a volatility of the S&P 500. You can look at it. I mean, obviously, this doesn't really apply to it. But what it does is it gives you a gauge of volatility related to equity markets. If equity markets are crazy volatile, I can almost promise you it's going to spill over into currencies. Okay. So you can look at this on a monthly. You can see that there's been some times where this VIX, and obviously we're looking back over more than a decade here, this VIX has just been bananas. And this was during the financial crisis here. And then right here, obviously during the pandemic. Always a good gauge of risk. When risk is elevated, this is above about 30. Granted, this is based upon a whole bunch of factors on the S&P 500, but I think it's always an index you want to keep an eye on. Don't need to watch it all day, but you can just take a quick glance at it, as it should be part of the arsenal of your quote list. Let's take a look at the NEO currency. I'm not going to really hit. Why did my notes keep moving around? There we go. All right, look at daily. Wanted you guys just to see that we're still within the range that this has been in for a while. Not much has changed. We keep coming up against this. And in relation to the dollar analysis we did, you can always jump between these. GBP. So pound getting a little bit weaker, obviously, because the dollar rallied. And then you jump over to what I like to call cross. And pound's been more strong in relation to the Canadian dollar. You jump over to actually one. I did want to note, I don't know if this is going to have any pin action effect on the pound. We keep coming up against this, and I think it's just going to rip above it. If we don't, we're going to go back down and visit this bottom area, as you'll often have a failure of an auctioning, right? You're going to essentially, they're auctioning for buyers above this level. They're getting none, so it just stays down inside of the muck, if you will, or trending sideways. Same thing on the downside. Essentially almost all times very high rate of accuracy that when you've touched a particular point and there's been no interest in at least taking a level or taking the price action above a given level, that it will trend back down to test the other side, right? A lot of people would have thought this would have been a break lower, right? But there was a whole bunch of other factors in play. Nobody was really ready to take it in terms of other time frame players, big players. Nobody was really ready to take it lower, right? So again, that argues just that it's going to spend some time auctioning, potentially back up towards the high point. Again, you spend enough time touching these bottoms and lows, there's going to be a break because, and I've talked a lot about this, but I think you could talk to the end of the earth on this, and there'd be people that still just don't get, and they've got to adjust their thinking in that there's just pockets of stops piling up here, right? and you could certainly say the same thing on the other side, pockets of stops on the bottom as well. So you just got to be cognizant that there could be a break. But unlike a stock, right, there's much different factors in play when you're dealing with currencies, right? There's other currencies. It could be a pin action for it, like the dollar, right? So it's almost like a different kind of universe you're playing in terms of price action. So that's the difficult thing about currencies is that you're like, well, I got to kind of know what the dollar did, and then if you're trading this particular pair, you got to know what the franc's movements in relation to the dollar is, and then obviously the euro currencies and the other currencies of trade, and obviously the yen affects it. There's like all these things you got to know chart wise, but I can always, at least in the last few months, just summarize it to say that we're trending sideways in a lot of currencies and they're coiling, which means that more than likely there's going to be a break. And remember, it breaks one way or the other, higher or lower beyond these resistance points. I don't want to be the guy stepping in front of the freight train. I want to be the guy hanging on the caboose, right? Trend trading has a high win rate historically in almost everything, especially when there's a break of a given level. AUD CAD still in the range. GBP NZD, this thing's always wild, but technically there's no interest in getting back up into the range here, right? Look at all these dojis. These are indecisions underneath a fairly solid support level, and it's not interested, as of now at least, in getting into that. So that argues for a possible push lower. Could be wrong, right? Where's Euro GBP? Still inside the range. I mean, it's like Jason CAD still inside the range. I already addressed this. Sure, the daily here. Spot gold. This was a surprise. But again, dollar rallied, right? Metals typically do the opposite. It's a pretty big move. I don't know if you guys are trading this or not. Let's take a look on the weekly, see if anything's changed. It really hasn't. I mean, if you even look at the data up in here, a lot of these market profile lines are, if you're just looking at, see the dates here. We only want data from the 20th of April, right? So as far as like an aggregated volume, it looks like there's not really showing us. It's too murky. So we would just go off these lines. Ultimate support for this is right in that 1680 area now. All right, let's take a look at some coinage. It's the weekly on the coin. Obviously, Bitcoin didn't really just start into its meteoric lift, which is approximately a little less than a year ago, as you may remember. To reset. Okay, so here's the broader move. I was just trying to look at what's gone on from a price and volume perspective since. So the posts I had essentially is if this 30, I posted this in AP Social, this 3780-ish area, all right, the 37,820-ish area, this whole essentially, the mid to low 300, 500 levels got to hold, or else more likely we're going to crash below this and we're going to be heading back down to the big area, which I think ultimately this thing's going to show up at. Hey, I could be wrong, but when you see huge moves like this right in here, these one time framing lower moves, and then you see some huge rip lower, right? It's dangerous because everybody that was a buyer thinking, oh, well, hey, we broke out, we've got higher support, which certainly could be the case. I could be wrong, but typically charts don't lie in terms of price action and at least a general forecast of could happen, right? The problem right here is you had a lot of buyers hopping on, thinking we were breaking to highs, and now they're in trouble. They're hanging on by a thread right here. Not everybody, but generally this is at least the bigger crowd argument that I catch among some of our chats with some of the different traders I talk with during the week. That's the general consensus among those being smarter than I in this area. Take a look at Ethereum is actually closer to a high. I think that certainly argument is that this goes back up and tests at ultimate high. That's just kind of looking like that. We had obviously a big sell-off here. Who knows? I could be wrong, and this could just head back down to the ultimate area of support, which is right in this 1800 area. All right, so I think that's everything I wanted to address. Yeah, I guess that's pretty much it. Cool. All right. Well, I wish everybody a great weekend. Be kind to each other. Don't listen to all the crap on television because most of it's complete horseshit. And have a fulfilling and happy week. We love you guys all. Be well.